welcome to Young Turks International. I'm Shireen Bhan. We're in London, and in our first episode we put the spotlight on the life and times of Aditya Mittal. That focus continues. Owning 10% of the world's steel industry is not good enough for Aditya. On his radar, India, surprisingly ignored by the Mittals for over 2 decades, and China. The steel sign is also keen on growing the company's mining businesses. Having survived the last steel slowdown, Aditya isn't worried about the current economic slowdown or the soaring price of oil. I believe you have a folder on your table which runs into about 80 pages, 3 deals a page.
I think you have too much of information.
Is there that sort of opportunity around? Really?
Oh yeah, there's...
You haven't snapped up everything that needed to be snapped up already?
No, we're small. We're 10% of the global steel industry.
So really 80
So there's
pages?
a lot to do.
80 pages?
80 pages. I'm trying to reduce it, but there's a lot because we're not only focused on steel, we're focused on mining, we're looking at iron ore, coal, manganese, other mineral products, we're looking at distribution growth, we're looking at project development. Clearly the biggest one is in India, but also in other parts of the world, a lot of brownfield expansion. So there's tremendous opportunity for us at ArcelorMittal.
But the balance sheet is fairly stretched at this point in time, $22 billion in debt. What size of deals are we talking about?
The balance sheet is not at all stretched because what we forget is that our earnings have also increased quite dramatically. So we have room in our balance sheet clearly to grow, but we have to be wise in terms of where we spend our capital. In terms of deal sizes, clearly I unfortunately can't see anything like Arcelor. Clearly that was defining deal.
That's a once in a lifetime sort of
deal. That's a sad
yeah.
bit about it, right? That is once in a lifetime. But there are things that we can do to further grow our company. The big emphasis that we have in terms of our capital is the greenfield and brownfield projects. On a combined basis, we expect to spend $50 billion over the next 5-7 years in growing our steel business. 20 million tons of brownfield growth, 23 million tons of greenfield growth, nearly 55 million tons of iron ore, a lot of growth in distribution as well. So that just gives you a flavor of how we're quite aggressive in growing our business as well in the absence of the big M&A deals like Arcelor. Analysts who look at the company say that if you sort of increase your exposure to Asia, you've pretty much got the world all sewn up. India is an area of opportunity for you. I believe it's your #1 priority area at this point in time. China, you've already got a presence there via 33% stake in Hunan. POSCO, is that a possibility at all? Or is it something that you're not looking at or something that's not on the radar? Our primary focus is India and China, as you correctly say. In India, we intend to grow. Organically or inorganically as well? Organically, I know you've got your plan set out, but it's a frustrating pace in India at this point in time, really regarding the sort of steel business. Inorganic growth, would that be a consideration? It's always a consideration. Anything identified? It's not a matter of identifying. You need a willing seller. Have negotiations taken place, clandestine meetings? No, I don't think so. I think in India everyone's focused on growing their own businesses. I don't think there's any serious steel company which is out there which is intending on selling itself at this point in time in the cycle. So right now everyone's focused on growing their own businesses, and so are we. Yes, the progress has been slow, but that's India. I'm not surprised. Clearly we have a very strong democratic base, a very strong, in some sense, a good bureaucracy as well. And it takes time because to allocate a mining license, to allocate land, you have to take care of the constituents or the stakeholders. So it is taking time, but fundamentally the potential is huge. But the roadblocks have been pretty severe as well. Just to take POSCO's example, over 3 years, haven't been able to get much done, haven't been able to acquire the land that they were hoping to acquire. I know you're not POSCO, you're ArcelorMittal, but can it really be, are you hoping that things will be very different for you? Roadblocks is the name of the game. I mean, if you were shy of roadblocks, you would not be bidding for Arcelor, right? I mean, we talked about that earlier. So clearly when the opportunity is huge, there are challenges, otherwise everyone would be doing it. We think we bring a unique set of attributes to the table in India. We have a lot of global knowledge, global technology, global R&D, global customers. Plus I hope we have some appreciation of the Indian way of working, being Indian. And I think we're making good progress. What's the sort of schedule that you've got now in place for India, and how hopeful are you that you'll meet those targets? We should be breaking ground in the early part of next year, in 2009, and we should be completing our first phase after we break ground within 2 years. So we should have steel being sold, produced in India in 2012.
Another question really on India and the sectors that are looking exciting to you there. Steel, of course, you've got big plans for, but you've been backing other companies who are involved with sectors like real estate, oil, for instance. India Bulls is an example. They've just listed on the Singapore Stock Exchange their REIT, and you've backed them significantly. Is that an area of opportunity that you're looking at, or is this a one-off?
It's not a one-off. To describe it, we have 3 other aspects of the family. One is the Mittal family private investment office.
That's right.
And that started right after the IPO. And I remember, for example, meeting with entrepreneurs like Samir Gehlot for the first time and liking what they're talking about, and we made an investment. And like that, we have multiple investments. We found a lot of hedge funds in the UK, as well as private equity houses, and we continue to do that. On the oil and gas side, I think that story is well covered. We have a joint venture with ONGC. We intend to expand that.
China. What is the plan now for China, and how confident are you about making further inroads into the Chinese market?
The plan for China is very simple. We want to have significant minority stakes in a couple of companies and work with them to develop their technology base, to develop their marketing presence, and also grow those companies. We've been very successful in our joint venture in Hunan Valin, the 8th largest steel company in China. We have grown it from an 8 million ton steel company to a 12 million ton steel company. It's done very well. We're doing more joint ventures in the sense we are going to be producing automotive grade steel through Hunan Valin. We're looking at electrical steel through Hunan Valin. So these are all technologies which are not available normally to these companies in China. And through that, we are enlarging our partnership.
Steel prices now, they've gone up about 30 to 35%. We've seen crude oil prices moving up. There is, of course, the sense that maybe demand will flag from countries like Asia and China on account of the economic downturn there. What are you picking up? Where are steel prices actually headed?
Steel prices are quite stable, and they're still increasing, but primarily because of cost pressures that we have. There's been a tremendous cost pressure in the steel industry. To give you a flavor, iron ore is up 3 times since 2005. It's the
mining industry's fault.
It's not their fault. I think they're driving us to increase our prices. The mining industry clearly has its own demand-supply issues. There's a constraint on the global world, and they're consolidated. So the real question is, why is all this happening? Why is oil at 135? Why are steel prices going up, ore and coal? And I think the answer has to do with the rapid industrialization. Since World War II, we had a couple 100 million people industrializing every decade, right? You had the United States first, then you had Europe, Japan, Korea, etc. Today, we have over 2 billion people industrializing, some in India, some in China, Brazil, Russia, which is creating a tremendous strain on resources. And commodities like steel, like oil, like iron ore, coal are in tremendous demand. And I think there's a price escalation as a result. For steel companies, clearly, the majority of our cost is raw materials. And hence, we are struggling very hard to catch up. We have a lot of contracts in which we're losing money because the cost increase is so tremendous that we're not able to pass it on to our customers. So that is clearly frustrating. We hope to correct that situation in 2009 and be able to earn a reasonable cost of capital.
But is there room or flexibility really for prices to move up further significantly from these levels?
I think there is. It's all cost driven. So there is no choice as such. And the steel industry has to cover its cost of capital. So there is room for prices to go up. I think steel is a very valuable product. The most important thing is how do we contain the cost inflation in our raw materials, which is iron ore and coal.
Speaking of iron ore and speaking of the raw material costs, do you think that at least the cost increase there has peaked, or do you think that there is further room for prices to go up on that front?
I think it depends a lot on the demand environment. If the demand environment is as strong as it was historically, I think prices will continue to rise. However, if there is some moderation in demand, then I think prices may stabilize or marginally decrease.
And what's the sense that you're getting? Is demand looking like it's moderating at this point, given the global economic slowdown?
At this point in time, there's no global economic slowdown.
You're not part of that camp that's calling that, you've got it happening in the US. Now India and China is likely to slow down. Interest rates are moving up. You've got the oil shock that most of these emerging economies are dealing with. But you're saying you're not really worried about a slowdown.
I'm not saying I'm not worried. I'm saying today there's no slowdown.
Okay.
Okay. Today you have a consumer economy which is weak in the United States. And clearly there's a credit crisis. And that is playing out on a global basis, and that will have some impact. The industrial economy, on the other hand, is very strong, and that's why you have oil still at 135 and reaching new highs. If people were worried about a global economic slowdown, you'd see a correction in oil. You'd see a correction in a lot of these commodities. There has been no correction so far. I agree with you, there are certain indicators which are not positive, such as high inflation, such as the increase in interest rates, such as the fuel subsidies which are going on. But there are also other indicators which are still pointing to tremendous growth, such as if India does not grow at 9%, it'll still grow at 7%, which is still fine, right? If China is not growing at 12, it might still grow at 9 or 8%, which is still fine. So fundamentally, I still believe that there is not perhaps a reduction in growth, but there's no global economic slowdown.